everyone. I'm Dave Keller, the Chief Market Strategist here at StockCharts.com, and welcome to our latest episode of The Pitch. The Pitch is a lot of fun. This is where we get to bring three expert commentators, three market practitioners into a virtual room together, sharing with you, each of them sharing with you five picks, five ideas, long or short ideas, to put to work in the markets today. Markets with plenty of uncertainty, but certainly the uncertainty resolving to the upside overall. With today, as we're recording this on a Friday early afternoon, you have the Fed comments in the last day or two. The market rallying fairly significantly. The opportunity is ripe to look for ideas, and we have three great guests to try to do so. Joining me today on The Pitch, we have three great commentators. Leslie Jouflas is the founder of Trading Live Online. TG Watkins is the director of stocks at Simpler Trading. Grayson Roze, our own vice president of operations here at StockCharts.com. And ladies and gentlemen, welcome to the first all Washington State edition of The Pitch. It's awesome to have you three joining me. Thank you.
Well, thank you.
Yeah,
It's good to be here.
Absolutely. So this should be fun, and just let all of our viewers understand the overall process here. We're going to have I'll introduce each of our guests today, and then we'll have each of them present their five ideas, talk through the charts. I'll be following along with you, and you can watch as they explain the charts and their methodologies and what they're seeing. They'll each have about 10 minutes or so to pitch their different ideas. Then we'll come back together as a group, have a great Q&A discussion where we talk about some of the themes, some of the strengths and weaknesses, some of the opportunities, maybe missed opportunities that we can identify, and it should be a lot of fun in just under an hour. Leslie, let's start with Grayson today. So Grayson, it's funny, you've been on The Pitch a number of times. You've actually moderated The Pitch a couple times, which we appreciate. I realized in my head, I often have you go third because you're sort of like the closer. And today I wanted to completely flip it and have you start out in a position of strength. I have your five charts ready. Get us started with Avalara.
Sure. So, it's funny, Dave, when we were talking a little bit before the show, we were sort of joking that all of my picks today are in the technology space, and really all of them are in the software space specifically. But, I'm sure we're going to talk about that at the end. But the way that I'm kind of thinking about these picks as we go through them is actually more thematically. So what we'll talk about, we actually have a sort of an online retail play in here. We've got an automation and semiconductor kind of combo play. We've got some cybersecurity, some cloud. I'm sort of thinking about these thematically in a couple of different ways. So we're starting here with Avalara, which is that online retail play. Avalara is basically a tax software solution for businesses. So if you purchase something online, the tax behind it is the sales tax and all that stuff is really kind of automated by Avalara. I love the setup here on Avalara. Starting right at the top, this is the chart style that I use for all these charts. We've got a relative strength line. This is the stock benchmarked against VTI, which is the Vanguard Total Index, the total U.S. stock market. So if this line is moving higher, that means that the stock is outperforming the market. That is what I want to see. I want to own things that are outperforming the market, that are leading us higher. In this case, we have Avalara, which has been leading us higher for the last couple of months. So I love that relative strength from Avalara. That's sort of the first stop. But then just jumping down into the price panel specifically, we've got a stock that's really kind of been basing for a little while, has been actually drifting sideways, but sort of within a broader uptrend. We can see that 200-day moving average still kind of climbing to the upside. And now what we're seeing is a stock that's setting up for a breakout from that consolidation range. I love that we've seen prior resistance turn to support here. We've really got a stock that's just breaking out of a beautiful base. So that, in concert with the relative strength, in concert with the fact that this is a stock that's outperforming the market, I love to see that. We've got great accumulation distribution down below as well. So if we scroll down this chart just a little bit, we're seeing a lot of buying going on in this stock, which is what I want to see. I want to see money flowing into the stock. A nice scooter score there as well, getting above that 75 level, almost getting above that 75 level that I like to watch. So a lot of things that I'm watching here on Avalara. And I think thematically, a great setup. Technically, a beautiful breakout setting up here as well. So if it can make that, I am definitely keeping a close eye on Avalara. Next up, we have ServiceNow. ServiceNow is that cloud computing theme. I mentioned that we got a couple of different themes that we're looking at today. So this is the cloud computing theme here. They do kind of workflow automations for businesses up in the cloud. A really kind of similar setup, a little bit ahead of where Avalara is. But same kind of idea. We have a stock that's outperforming the market. I love to see that relative strength coming out of ServiceNow. This is actually a pretty big stock, $125 billion stock. We can see that up in the full quote at the top in the little market cap window. But again, we've got a stock that has been kind of basing for a little while, drifting sideways mostly, but again, within a broader uptrend. So, again, we've got that prior resistance turned into support. It's tested the lower level of that consolidation range a couple of times. Now is actually making the breakout. So like I said, this one's a little bit ahead of Avalara. But, I think the well-tested breakout above that consolidation range is just beautiful. If we did get a little bit of a retest of that level, once again, I think that'd be a great entry. But oftentimes these breakouts really can just start to run, especially when we have a market that's running the way that today's market is. So even where ServiceNow is sitting right now, I think is actually still a great entry. But a beautiful breakout there on ServiceNow. If we scroll down a little bit to, again, accumulation distribution moving higher. I like to see that money flow into the stock, and a very similar setup as well with the scooter score sitting there around 75. A little bit overbought on the RSI, but not too bad, especially given where we are on that breakout. So I love the technical setup here on ServiceNow as well. Next up, our third target, we've got Synopsys. Synopsys is actually kind of an interesting stock. It's really a combo semiconductor plus automation play. What's interesting about this, again, similar to the two charts that we've looked at already, we've got great relative strength. But in that relative strength panel, actually, we're seeing something even better. If we drew a horizontal line across the top of it, we'd see a stock that's actually not just outperforming, but also breaking out to new relative highs, in addition to the breakout that we've seen a couple of sessions ago just on price alone. So a beautiful setup here, I think, on Synopsys. A great theme with this kind of automation and semiconductors. They're in a lot of things like new cars and things like that. They do a lot of chip design plus automation work. So a really interesting company. But breaking out to new relative highs and new highs on price alone, the 200-day just continuing to climb up. And again, we've seen kind of prior resistance turned into support, a little bit of a basing pattern coming on here, consolidating sideways, and then breaking out above that. I love what I'm seeing here from Synopsys. Big volume too on that breakout, which was interesting. We can see that kind of faded out there. Pretty overbought on the RSI. So I would be looking for a pullback, hopefully to the top of that range, a bit of a breakout retest kind of move there. But again, the accumulation distribution moving higher, a lot of money flowing into this stock. And the scooter score on this one even stronger, sitting up at 94. So really strong from a technical perspective. I think the setup there on Synopsys is just beautiful. Number 4, we've got a cybersecurity play. And similar to Synopsys, a little bit ahead of that maybe, we've got, again, beautiful relative strength. I love to see the long-term relative strength on this too. Zscaler is a cybersecurity company. And to see that long trend line there in the relative strength panel up at the top has just been outperforming for a long time. Again, kind of basing a little bit, consolidating a little bit in the last few months, but now making new relative highs again against VTI, the total market. Just a great relative strength view right there at the top of this chart. And then on the price panel, we've actually had a breakout, a retest of that breakout from the top, and we're now shooting higher off of that. So it is a little bit stretched. Again, RSI a little bit overbought. I would love to see the volume a little bit bigger here. But the setup overall, especially that relative strength and the theme of cybersecurity, which has been an incredibly strong theme. Accumulation distribution could be a little bit stronger on this, but overall, the picture over sort of the last 16, 18 months has been really strong. And again, a scooter score there of 96.9, really high scooter score. A technical leader, that's kind of exactly what I want to find, something that's outperforming the market, breaking out to new highs, and just kind of sort of staying strong from a technical perspective. So Zscaler, I think, a beautiful setup here. Finally, we are moving into another cybersecurity play, but this one is a little bit different. So this is the only ETF that I brought. All of the other ones were all obviously individual stocks. But cybersecurity has been a strong theme for a long time, for the last year and a half or so. But again, has been actually consolidating a little bit over that time in the last few months. Still within that broader uptrend, though. We can see sort of this big ascending triangle there on cybersecurity. What's interesting about Bug here is that it's typically a little bit of a smaller cap cybersecurity play. Now, there are a couple of these ETFs out there. Cyber, CIBR, has been one that a lot of people talk about. Hack is another one that a lot of people talk about. Those actually kind of go after some of the larger players in the cybersecurity space from a market cap perspective. Bug is a little bit further down the cap tier, going after some of the smaller cybersecurity names. And I love what I'm seeing across the board, actually, in cybersecurity in that space. We've got some of those other ETFs setting up beautifully as well. But Bug really making the breakout right now out of that consolidation range, out of that ascending triangle. Strong from a relative perspective. We can see, again, that relative strength line moving higher. So this is an ETF, a theme that is outperforming the total market. And we're seeing some good things happening in this space too. We're seeing, even big companies like Microsoft just had a big announcement saying they're pouring billions and billions into cybersecurity. Obviously, as the world, thematically, as the world moves more and more to a digital kind of environment, cybersecurity becomes even more important. So thematically, I love the idea here. Technically, I love the setup, seeing this breakout. Huge volume on this too. That's one thing I want to point out on this chart. Pretty faded out. I keep my volume bars actually pretty faded out on my charts, but big volume in this stock. Again, a little bit overbought on the RSI, but not too bad. Has been up. I think I was counting it earlier. It's like 7 sessions in a row. So I would expect a little bit of a pullback here in Bug, maybe a good buying opportunity there. But I mean, look at that accumulation distribution, just tons and tons of accumulation in this stock, a lot of money flowing into it. And a scooter score of 99.2. I mean, it really does not get much higher than 99.2. It only goes to 99.9. So a very strong technical theme here. And I think Bug is a great way to play it, or some of those other ETFs as well, Cyber and Hack. Those have actually been a little bit ahead of Bug. They've actually kind of made the breakout a few weeks ago and have been moving higher. So Bug a little bit behind, which is I think a little bit better from a kind of risk reward standpoint. So beautiful setup here on Bug. That's kind of my top pick in that cybersecurity space. So I think that was 10 minutes. Was that 10 minutes? That went by really quick. That was 2 minutes. I got another 10 minutes, don't I?
5 picks, well done. And you kept on time, Grayson. So it can be done. Thank you for that. I'd love to ask you just a brief question. So,
Sure.
you started with relative strength. That's the top indicator on all of your charts. And I'm selfishly asking about that because you and I have talked, obviously, both of our processes focus in some degree on relative strength. But
Heavily.
Can you talk about why that is an important starting point? It's interesting as you're laying out these 5 ideas, you're starting with the relative picture and how this stock is doing relative to other names. Why is that an important place to start for an investor?
Sure. So I benchmark everything against VTI, which is a little bit different. A lot of people actually benchmark against, when they're doing relative strength lines, a lot of people do, the actual S&P 500 index or something like that. I like to benchmark against VTI because it's something that I can own. It represents the total US stock market. It's incredibly cheap. It's 3 basis points, incredibly huge, incredibly liquid. I can own VTI. If something is underperforming VTI, why would I own it? Why would I not just go own this total market index for 3 basis points? That is effectively free. So that is kind of my ultimate measure as an investor. VTI is my benchmark. If something's outperforming it, I'm interested. If something is underperforming VTI, I should just own that ETF. I should just own the total market. I have no business owning something that's underperforming. So that's why VTI is my ultimate measure. I do drill in a little bit deeper in some other relative strength views into the sector versus VTI and the industry versus the sector. But ultimately, the highest level is that stock or that ETF versus VTI. And for me, it's because that's actually something that I can own.
Yeah, our fellow StockCharts commentator Tom Bowley once told me, if you want to outperform the S&P 500, you have to own stocks that are outperforming the S&P 500.
There you go.
Well illustrated. So here are Grayson's 5 ideas that he pitched for you. Number 1, Avalara. Number 2, ServiceNow. Number 3, Synopsys. Number 4, Zscaler. Number 5, the cybersecurity ETF Bug. Staying all within technology. He attempted to imply diversification with different themes, but let's get one thing straight. We want all tech with your picks, Grayson. Listen, thanks for that. That was well done, and I appreciate it so much. Leslie Jouflas, thank you so much for joining us today. It's awesome to have you on. I know you're joining the pitch for the first time, but thank you for coming on with us.
Great. It's great to be here. Thank you, David, for inviting me.
Now, you have done such a great job. You host your Daily 5. I know you're a frequent host of that. You've come on my show, on the Final Bar on StockCharts TV, and it's always great to have you on. When I think of you and your work, you literally helped write the book, or one of the books, about patterns and about chart patterns. So I think Well, I appreciate talking to you because I focus a lot on trends and moving averages and some of these more trend following techniques. And you always often will bring ideas that are a little contrary to what I would think, which is super, super helpful looking at patterns and how they evolve. So I'm excited to hear your ideas. Let's start with idea number one, Cody, COTY.
Yeah, we have a little bit around the gamut today. This is in the consumer staples. And as I was looking for some charts, I noticed actually quite a few consumer staples charts kind of starting to come to life. And this was one of them. We're looking at a monthly chart right now of Cody because I wanted to give sort of a broad perspective of where it was and where it is now. I've got a trend line drawn down on this monthly chart, and you can see the price has broken above the long-term trend line. Now, the consolidation pattern that is sitting on top of that trend line, there's actually what's called an AB equals CD pattern. If we scale it down to a smaller time frame, we would be able to clearly see where we have a high, a low, a retracement, and then another low. There's a little trend line just above that. About 1050 is the high of that. This stock is looking bullish to me. We've got the RSI that's in a very bullish position. If we look at the RSI, it came up from the lows and it's currently sitting above the previous peaks of the RSI. Maybe Dave, you can just kind of point to that on the chart. You can see it. The monthly consolidation in the volume is also looking bullish as the price is starting to come back up. The volume is moving up with it as well. The on balance volume, which is down at the bottom, the pink line, that's also in a bullish position right now and turning to the upside. So those are all very good signs with more to the upside. Now, I use some Fibonacci retracements and Fibonacci ratios and extensions in my work. I don't rely on them 100%, but they are helpful. If we take a retracement from the highs back in 2016 all the way down to the lows in 2020, a 50% retracement is going to bring the price up to about $17 area. And we can find some confluence with that if we use that price peak in early 2020 down to the bottom and we extend a Fibonacci ratio of 1.27. That's coming right in with that 0.50 retracement of that bigger swing. So my expectation is that the stock may travel. Now, this is a monthly chart. I know you guys all wanted to get there tomorrow, but it might take it just a little bit of time. The risk area on this would be just below this current consolidation area, just probably right about the 6 area on that. Okay, the next one I have is Travelers. TRV is the symbol on this. And this has what I just mentioned, the AB equals CD pattern. So the low that is from June of this year, you can see the retracement up into the July, and then another retracement down that did not exceed the low in June, another swing to the upside. That's the AB equals CD pattern. You can see there's a resistance level where the price has been trying to get through those highs around that 163 area, but it's not been able to do so. There's a bearish candle, there's a bearish engulfing pattern from the close yesterday. With Japanese candle charting, generally when you have a long bearish bar or bullish bar, the retracements can come up to about the halfway mark, maybe 0.618. But it shouldn't exceed, if it is bearish, if this is a short sale here, it should not exceed those previous highs. I also have the retracement from the low from July, and I think that this can probably get down to, around the 618. If it starts to break with long bars on the way down to it, then I would expect a deeper retracement. it's possible that this is also starting to form a very wide range. If we look at the lows from June and July, and we sort of just make a horizontal line across, it's possible that the price can come down there and test a lower end of the range. So the risk on that trade would be just above those recent highs. The next chart is Apple. This chart, and it's interesting that I'm seeing such a mix of patterns right now between bullish patterns coming in and then also bearish patterns on some of these kind of big name stocks. And Apple has what's called a butterfly sell pattern, and it also has the A, B, C, D in it. That last leg usually extends and gets above a previous swing high. We can see that Apple's already turned down and had a smaller, what's called the butterfly pattern, A, B, C, D, the CD extending up a little bit. And it started to turn down. We can draw a little bit of a trend line in from the July lows up through the lows there. And I would be watching that trend line for a definitive break to the downside. And the recent highs from just a few days ago would be the risk level. Now, I kept on this chart a moving average of 50 is the blue line and 20 is the red line. I wanted to illustrate that these types of patterns are usually leading, and the entries are optimal with this type of pattern. And you can see that the moving average, if this is going to break a trend line, become more bearish, the moving averages have a ways to go. And so you're giving up a good entry point. So this is why I prefer to use just the patterns with this. So we can also use some retracements to do some targets. We can use the lows from May and June, do some retracements down from there. And again, using a trend line for a little bit longer term, going back to October 2020 and coming up through those lows may also be a good guide to be using with this. So our next stock is Newmont. Now this one, I just had I had a strong feeling about this one. I just thought, okay, just stay there until tomorrow. And this morning it's up pretty strongly. So let me walk you through, because I have been watching Newmont and some of the gold stocks for the last couple of weeks, because I was starting to see some early signs of they might be putting in a bottom. If we look at the left chart, that's the daily chart of Newmont Mining. And earlier there was a big ABCD buy pattern. You can see the break above that trend line. Prices rallied up really nicely. And then it came back down and it's just sitting on that trend line. Well, the right-hand chart is a 60-minute chart. So I scaled down to that to kind of get a little bit better perspective of what is happening. Usually the turns you can see first on the shorter time frames, and then they take some time to work out to the longer time frames. So I drew a trend line, a horizontal trend line, and that's the risk area. And then I drew a trend line for a break to the upside, which would be a trigger into a long trade, which it's broken this morning. It just couldn't wait another like 3 hours to do it. But I think what's interesting is looking at these RSIs on the daily chart. The daily chart, the RSI is still in a bearish position, but has some bullish divergence. And the right-hand side, the 60 minutes, is showing us bullishness. So I do think that we're going to be looking at some more upside with NEM. And then the materials sector, you can see on that, we're just sitting on a trend line. This is a weekly chart, and I've noticed a lot of stocks in the materials sector that have been in persistent uptrends that have just recently had a pullback. So my suggestion would be to look for some stocks in that sector. The RSI is in a bullish position and the on-balance volume is uptrending. So the last thing, and also the scooter, I have the scooter on that. Grayson mentioned that. It's at 75. It looks like it's just testing right now, just pulling back a little bit with the price. But again, another trend line could be used from the May highs down through the July highs, and that could be an entry long into that. So I think that those are my 5 charts that I have today.
It was beautifully done, and thank you so much. Just to review Leslie's 5 picks, we had Cody number 1. So Leslie, again, the only one bold enough to pick a stock in consumer staples, but it's a decent chart for sure. We have Cody number 1, number 2, and number 3 were short ideas. Travelers short TRV. We have Apple short number 3 AAPL. Number 4 and 5 both the materials sector. So 4 we have Newmont Mining NEM, and then we have the materials sector XLB as the final item. So that's the listing overall. A little more diversity in terms of sectors, and a couple things like financials and materials, a little more cyclical nature, but one of those is short idea. Travelers. TG, thank you for being incredibly patient, and welcome to the show today.
Hey, no problem. Thanks for having me.
So, listen, I'm super excited for you to join us. You and I and the rest of the StockCharts team, we've been talking a lot because we are in the process of getting some of your great content onto StockCharts.com, particularly our ACP platform. I know some of the charts you're going to show, if not all of them, probably featuring your Moxie indicator and some other tools. So I hope you're able to describe how you apply that in some real life situations. Let's start with chart number 1, which is Etsy.
Certainly. So Etsy here, even from just the way that you look at it, looks like a pretty good chart set up nicely. I've got the daily chart on the left and the hourly chart on the right. I usually like to use multiple time frames like this to help me see the bigger picture and then zoom in to see, okay, exactly where is this going to be shaping up. Some of the things I'm going to be bringing to your attention are divergences. And on the daily chart, you can see that recently we've had price kind of forming a bottom, but the Moxie indicator has been forming a higher low. And yeah, exactly there. And so then what you can see is the Moxie indicator actually crossed from below 0 to over 0, and that's where we get the green arrows on price. So it's just a visual representation to help call your attention to, hey, the Moxie indicator is now going positive, and a lot of times that is a good timing mechanism when something's going to go. And you can see that the Moxie indicator on the price chart actually fired some green arrows, and then price started to move up. You'll also see the same situation on the hourly chart over to the right, that the green arrows fired. That's when the Moxie indicator went over 0. And you can also see that is when price started to follow the magenta color line, which is the hourly 50 SMA. And so between these moving averages and the Moxie indicator, everything said good to go. I got my Moxie subscribers in. You can see actually right at the white line, and then it popped the next day or two after that. So just a really good, perfect trade. Everything was starting to expand. The 8 and 21 EMAs were starting to expand, which are the blue and reddish lines. You can see them expanding. You can see the same thing even on the daily chart. The blue was starting to expand from the red, and just the prior couple days earlier, price was starting to tap and find support at the daily 50 SMA and even the 200 SMA, which is the magenta and then the salmon colored line. So just even without indicators, this chart just looked amazing. And then you add in the indicators and they actually start calling them to your attention. Some of the features that we have with the Moxie indicators that we can scan for these things. We can actually have these things brought to us by the price triggers. So we can scan for them on the hourly chart and we can scan for them on the daily chart. So this ticker, Etsy, would have been brought to our attention on multiple occasions in the last few days or last week. And so we shouldn't have missed this trade. And so that's why we got in, and everything is looking pretty good. And now it should be on its way. So we're just waiting for it to kind of keep staying within some support. Obviously, we had a very, very strong day the day after the day that I posted this. So just be prepared that there might be some backing and filling until price comes into support, and then it should carry on because, hey, what's not to love about this chart?
Very, very good. Chart number 2, an ETF. We're going with the FFTY, the IBD 50 ETF, right?
Yes. Now, I've been using this one in conjunction with the IWM, which is the Russell. And part of what I've been looking at this for is because they, I think, have really shown a lot of what's going on underneath the surface in kind of the small caps and the kind of stocks that I like to trade. So yes, on the surface, the S&P, the Nasdaq, they've been doing great. Apple, yeah, well, Apple, I was going to say Amazon. Amazon's down a little bit, but Apple, DocuSign, like all the big cap tech stocks have been doing great. But you look at the IWM, you look at the IBD 50, what have they been doing for basically the last 6 months? They've been going sideways. Okay, so nothing's quite, it's not terrible, hasn't really fallen apart, but what are we going to do? What is this a sign that something's going to get worse, or when do they finally get going? But what I wanted to bring to your attention was that there's actually something starting to change here. And I'll call you all the way to the left, which is the monthly chart. And what you'll see is that basically for the last 6 months, the IBD 50 has really just been flagging sideways, and it's just now coming into the monthly 10, which is that blue line. You can see the price is starting to get up there. And actually, since this slide is a day old, we're having a pretty good day today. So you're starting to see that price is moving up. It seems like it's starting to break out. Then I'll move your attention to the middle chart, which is the weekly time frame. And you can see that there was a bit of a dip a couple weeks ago, but it went right into the weekly 50 SMA, which is that magenta colored line. And that's great. I look for stuff like that to come down into support, test it, confirm that it wants to go up, and now price is back up. We've got the 8 over the 21 again. It's starting to expand. Again, this is a day old, so today, the chart is up even higher, price is even higher. We've got a squeeze, which is down there. That is one of our simpler trading tools from John Carter himself. So that is looking really, really nice and tight. A lot of energy in there. So if this ETF and this sector starts to move up, and I know it's the IBD 50, which is kind of telling us what a lot of different stocks are starting to do, if we get that energy release, we should be talking about some good stuff coming up in the future. And then if we look over to the right chart, which is the daily, you can see that it's basically been a mess for 6 months, right? Just kind of chopping around, can't do anything. And the thing that I really want to call your attention to is what happened about 4 or 5 days ago, where price got over the daily 50 and then pulled back into the daily 50 right there. Exactly, Dave. That is where price came back into it and bounced off of it. And if you look left, there was no other place that price did that. Recently, price, every time it got to that daily 50 SMA, maybe it hung around for a day or two, but it fell through, and then maybe it bounced up over it, but then it fell through again. And this is something different. This is the kind of stuff that I like to look at and say, oh, something's changed. This is now interesting. And today we have price even higher. So everything's looking pretty good. We've got that 8 and 21 starting to expand. And if this keeps up, I'm looking forward to what we should be getting into the end of the year. I look at it mostly as the summer doldrums, and kids are coming back to school, the parents are coming back, all that kind of stuff, and people are back to their routines. Hopefully we're going to see more names participating in this market, because we have been having some poor breadth indications out there. A lot of stocks have been trending down, even though the indexes have been doing well. We've been kind of struggling, and I think that the FFTY and the IWM have been pretty good indications of that. And we've been starting to see the IWM, after its recent longer term double bottom, looks like it's starting to pick up too.
Very good, and I love you as well as Leslie had. You're combining the different time frames very, very well there, and thank you for that. Chart 3, Under Armour.
Yep. Now this is another one. Kind of looking around. I think I've picked. I didn't go with tech as Grayson did, but it looks like I kind of went for a certain sector. And honestly, when I was doing this, I was just looking for good-looking charts. And if all the good-looking charts I happen to find are in a certain area, so be it. That might be telling us something. And again, I'll bring your attention over to the far left, which is the monthly. I like to start from the higher time frame to give me the context to say, hey, what is it that I'm going to be looking at? Because if we scroll too far down into like 15-minute chart or the hourly chart, we may not really know what's going on. It's like kind of a bug's life. We're going to be looking at this thinking everything's a big deal, but really there's something bigger over us. And so if we look here with Under Armour, we see that price has had a pretty good run for a while, but it's been pulling back. And look what it's pulling back into, the monthly 10 SMA. And it seems to have held. We now have this month, it's starting to bounce off of it. So let's look a little bit further down and figure out where we're starting to find some structure and some confluences and confirmation of this. And if you look at the weekly chart in the middle, same thing. Price has gone up for a long time, but it took a little breather. And look what it came back into. It came right down into the weekly 50 SMA, which is that magenta color line, actually down just a little bit right there. And you can see price pulled back into the weekly 50, which also happens to be the weekly 200. So we've got two things that are working to our favor, and price is shot back up again. Now, I don't normally trade earnings, and you can see that the big bounce was because of earnings. So that's great. I'm very happy to see that apparently earnings were good. Whatever news there was, the market liked it. Price shot up. But I'm not going to go jump and buy something that's high. I'm going to wait for it to pull back because it put in some gaps. It was too far away from support. And look what it's doing over the last couple of days. It's pulled exactly back down to support, pull back to the daily 21, the weekly 21, the weekly 8. All that's looking great. Again, we have the squeeze down there looking really, really bright red. Got a lot of energy ready to release. All these things are looking good on these timeframes. And then we scroll down to even the daily chart, which if you want to zoom in on that one, you can see that we recently not only had price bounce off the monthly 10, the weekly 50, the weekly 200, we also had it bounce off of the daily 200, which is right there. And then we got that good news from earnings. And then we had price pull back down to the daily 50, and that thing's looking good. So as long as that handles, we're looking good. And you can see that the Moxie indicator is also above zero, telling me that, hey, this pullback should be supported. We should find something right there and keep moving up. So it's looking great.
Fourth chart, we're going a little mega cap here, a FANG name, Amazon.
Yeah, now this one's just, I'm trying to give you a little bit of heads up. So if you look at the last 2 times that price has really pulled back on, you can start with the daily chart. You can see we've had the 8 below the 21 on these pullbacks. Yeah, kind of in that area. And then you go 1 over right in that area. And look at where we are currently. Very similar, right? So what I'm looking for is a little bit of a pullback, and I want to see those same patterns set up. So this one's more like, I'm just going to give you the heads up, but I do think that it's not going away. We're going to find some support. It just needs to chop around a little bit and eventually watch for it to catch some support, get that 8 to cross over the 21, and then we should be good to go.
Very good. And then one more chart, we have TUP, TUP.
This one too, I like to look at the higher time frame. So on your own, go take a look at that one. But mostly what I'm calling attention to this one is on the daily chart. We've been seeing price go down for quite some time, but notice that the Moxie indicator has been going up at the same time. This is the positive divergence that I look for. Why is price going down while the Moxie indicator goes up? It's trying to tell you that internally, momentum pressure is starting to change. And look what it's done. It's now pushed price over the daily 50. And now price has come back down to the daily 50 at the same time that the Moxie indicator has crossed over zero. So we got that price trigger. And what I'm looking for, this is another one, might need to wait for a little bit, but I want to see price start to hold that daily 50. And if it can, then we should start seeing price move to the upside. And on the hourly chart, what we're starting to notice is price is starting to hold and turn the hourly 200, which is that salmon colored line right there. You can see price is starting to turn that up. And as long as price can continue to hold that, and then if you look even today, or actually yesterday when that was, price came back down to the hourly 50 with the Moxie indicator firing. And as long as both of those moving averages start to hold, we should be in the green territory and start to watch price to move up from here.
It's a great set of charts, and I really appreciate TG in this short amount of time just talking through so many different scenarios. I'd love to just talk briefly about the Moxie indicator because it's featured on all of the charts that you've showed us. You mentioned, I think, on the chart of Tupperware, might have been with the chart of Amazon. I think it was this Tupperware with the price going lower, the Moxie indicator starting to rotate zero. But a number of times you mentioned how it being above the zero line is so important. Without giving us obviously everything underneath the hood, what does that tell you? Why is that important for the Moxie indicator to be above zero? What does that indicate to you?
Well, it's a momentum-based indicator, so you think about it with energy. And if it's below zero, well, the energy is negative, right? It's going down. You can actually look on Tupperware ahead of time where we had the red arrow, and leading up to that red arrow, you could see that price kept going higher and higher and higher, but the Moxie indicator actually kept going lower and lower and lower. So the indicator works in both ways, and what it's trying to show you what is going on with the internal energy of price. How is that momentum working? It works to the long side, works to the short side, and what it's showing you is, hey, something's starting to turn around. And it works pretty well as a timing mechanism because you can see that even with the red arrow, that is when price started to wear out. That's when energy went negative. And now we've got a green arrow, so I'm looking for energy to go positive. And if you go all the way back to the left of that chart, bottom left of that chart, you can see the Moxie indicator went green again, and that was the other start. So this is a really good example of a whole trend that goes from the green to the red to the green again, and we'll have to keep watching this and see if it's going to work out like that.
Great illustration, TG. And to recap your 5 picks, we are all in the consumer discretionary for the most part. You have Etsy, number 2, the 50, the Innovator IBD 50 ETF, which granted has some other sectors in it. It's got some financial, some healthcare, it's a mix, but very growthy oriented for sure. Number 3, Under Armour. Number 4, Amazon. Number 5, Tupperware. Thanks so much, TG.
Great, thank you.
All right, so now we've heard the 5 pitches from each of our 3 commentators. Let's move on to one of my favorite parts of the show, if not the favorite part, the Q&A. This is where we can have a good discussion and start to look for some similarities, look for some differences, look for some opportunities as much as possible. Guys, listen, all three of you did such a fantastic job of describing, and I know that can be a challenge to describe what in a lot of ways can be a sort of a detailed analysis in very, very briefly. And you guys did great with that. A number of you sort of alluded to the narrowness potentially of the sectors that we chose. TG, a lot of your names in the consumer space, Grayson, a lot of those in technology. Can you talk about just that that idea? I was told as an investor we should diversify. We should be looking, spreading our bets around as much as possible. But you're giving us some very narrow ideas of where you're seeing opportunities. How do you balance those two things? And what is it that caused? Was there a top-down component to how you thought, Grayson, about technology, or is this more where the ideas bubbled up?
Yeah, it's a good question. I mean, in a show like this where I'm just sort of picking names, I am coming at it from a little bit of a kind of a bottom up stock picking perspective. But I think what's interesting in this case is just like TG was saying, I'm looking for great chart setups. That's ahead of everything else. I'm curious to look at the sector weightings. And for me as an investor, when I'm actually building an entire portfolio, that is a part of it. I'm thinking about how heavily I'm allocated to different sectors and things like that. But ultimately, at the same time, price is always first. And for me, I want to be in charts that are setting up nicely. I want to be in stocks that are outperforming the market, outperforming VTI, like we were talking about. And so in this case, these are just 5 charts that are setting up beautifully from my perspective. And that's why I'm picking them. I think what's interesting specifically about the technology sector right now and kind of why some of those charts, some of those setups came from technology. It's actually a sector that, while it did have a great 2020, we've seen a lot of weakness out of technology in the first half of 2021. That's starting to change. But what we're seeing is a lot of these consolidation patterns in technology. And ultimately, some of the best setups, some of the big breakouts from those sideways trading ranges are coming out of technology because it's been a weaker sector for most of 2021. So it does sort of make sense to me that I'm ending up finding all of these technology names that are really kind of starting to work.
TG, does it bother you at all that your ideas are all sort of focused, or is that more representing strength in a particular area? What's wrong with that, right? Strength is strength.
Yeah, and it was actually interesting that you called it out earlier today on that, because it was not something I was expecting. But as you talk about it, it reminds me of something that one of my old mentors said. And she said they travel in packs and they bring their friends. And so I think Grayson's experiencing that too. He's like, hey, tech was kind of weak for a while, and now they're all starting to take off again. Like, look at cybersecurity; those things are starting to take off,
Yeah.
and maybe consumer discretionary is starting to take off because, well, a lot of that has been about the whole COVID situation. And then when the vaccines came out, we saw a lot of those things like, say, Under Armour start to pop up. Well, they took a little break, maybe just because of technical charts. You look at them on the monthly and the weekly, and they kind of ran into resistance or they overran their support. And so from a technical standpoint, it just kind of makes sense that they're coming back down to support, which is what I'm finding. But then we could also be looking at it, hey, people are coming back from summer. We're starting to get into Christmas and holidays, and we're preparing for the shopping season, and people are just back. They're not traveling as much. And then we can also be looking at, well, I know the Delta variant's out there, but we still kind of have a handle on this. We do have the vaccines. We're kind of doing what our thing we can. We're adapting. And life isn't going to go away. So I think we're still looking at this stuff. They're going to come back. And I think this is probably going to be the next iteration of it, which is maybe why I started to look at those kind of stocks.
Great responses, both of you. Leslie, I'd love to circle you in, particularly when you were showing your 5 picks. And again, you had a lot of different areas that you cover, but you also were incredibly diverse in terms of your time frames. So you had a monthly chart all the way down to an hourly chart and kind of everything in between. Can you talk a little bit about how you think about those different time frames? What about when you get conflicts from the long term to the short term? How do you sort of make sense of all that?
Well, I look at changes. What I'm always looking for is a change. So if for instance, on the symbol NEM, Newmont Mining, down, sitting down at lows, had been beaten down, 0.886 retracement from the lows up to that high. And I find that if I can find a bigger picture like that longer term trend line it's sitting on, and then scale down to the smaller time frames, I'm looking for signs that there is a turn coming. And I'll use, of course, patterns. NEM, even on shorter time frames than the 60-minute, we're showing some bullish patterns. And then I look at just a couple of things. I really base my analysis in patterns, which of course are price. And then I'll add to see if there are some early footprints that there might be, in NEM's case, some bullishness coming into it. And I did see that. And so that's just sort of my process. It just, the momentum will start on the shortest time frames first. They don't always work out to the long time frames, but you can combine those long time frames with the short time frames. I'll go down to 5-minute charts. I'll go down to 1600 tick charts, and all the way back up and do the analysis. So I'm looking for footprints.
That's a great point. And I think when I was watching you and TG both, you really, I think, both spoke to the what's called the fractal nature of technical analysis. It's really time frame agnostic, although there's some peculiarities if you're looking at really long-term data, really short-term data. I think you guys both did a great job of illustrating that. I'd love to talk for a moment. Again, the market is raging higher as we're recording this, which is always fun to see our charts evolve real time as we're talking about it. But let's talk a little about what none of you really focused on, which are some of the cyclical areas, right? So energy, the number one sector today, bouncing higher. If we're looking at a chart of the XLE, and again, I'm talking my own book probably, because if I was one of the picks, I would have picked at least something in the energy sector, given some of the movements that we've seen. I'd love to think, Grayson, when you're looking at something like energy, you didn't pick anything, and I know you can't. I mean, obviously you have 5 picks out of 5 million you could be selecting, but what would you need to see in something like Valero or some of these stocks that have really been underperforming but starting to bounce here? What would you need to see on a chart like this to start to get interested in something like energy here?
Sure. So, I'll be honest, a lot of my process centers around scans for new 52-week highs, and more of my process actually centers around scans for all-time highs. Ultimately, one of the most bullish things that a stock or a fund, a sector, anything can do, an index even, is make an all-time high. We're seeing a lot of that out of things like the S&P 500 and the NASDAQ today. Ultimately, I'm still sort of shying away from the energy space because for the last couple of years, we've seen that space get so beaten down. Mm-hmm. So, I'll be honest, when I'm running my scans for all-time highs, energy isn't there. It's just not really showing up. So I am interested in that space because we have seen quite a substantial recovery. I mean, when we're looking at things like new 52-week highs, that is showing up, but there's still a part of me that's shying away from that space just because we've seen so much weakness really for years now. I mean, it's been years of energy just being sort of a chronic underperformer. I do love the setup. I will just say there, XLE itself, again, a consolidation pattern here, kind of bouncing off of, what is that? You have the 200-day in red. So bouncing off the 200-day and also bouncing off of a sideways trading range there. I mean, it's the same kind of reverse setup that I was looking at on a lot of those charts. It's bouncing off the bottom of the range as opposed to testing the top. So, interesting setup there, but still all-time highs, not really happening in the energy space right now.
TG, when you were talking about the trends that you're seeing in consumer, and again, you're highlighting some of these stocks that have had some pretty good moves and following through this week. You also mentioned sort of the overall environment. Does it, I guess the way I would ask the question, does it bother you at all? Because the conventional wisdom would say at some point, the market does need to correct, I've been told, right? I've learned in market history that you do have pullbacks greater than 5 to 6%. We haven't had any of those this year. So does it concern you when you're finding stocks that are setting up well, but just there's this specter of a pullback that just never seems to materialize? How do you balance that risk with the charts that just appear to be going higher?
Well, without really specifically discussing the S&P or the NASDAQ, what my answer would be is that we've looked at that poor breadth. So we look at that underneath the surface, a lot of stocks have been cycling back down and not doing so well. Meanwhile, the indexes have been staying up. And so somehow the big leaders have been keeping the markets up, but everything else underneath the surface kind of falling apart, rotating down. Maybe what's happening is there have been pullbacks underneath the surface. I mean, we look at the IBD 50 and we look at the Russell, they've been trading sideways for 6 months. So is that enough of a resting period for the market? Yeah, maybe. If you look at the Dow, it's been going sideways too. So I know that the S&P and the NASDAQ have been going crazy, and that's where we're asking that question. But if we look around at some other sectors, and other things that they've been pulling back. Under Armour's been pulling back. You know, Amazon even took a little break and pulled back. We're looking at Apple. Apple's flagging sideways, trying to get into that daily 50. There have been some weaknesses underneath the surface. And to Grayson's point, he's looking at tech. He said they were kind of weak for the beginning of 2021. So they've been pulling back. And to your point, to XLE, you know, that XLE chart looks a whole lot like the Under Armour chart. It's pulled back into the monthly 10. It's pulled back into the weekly 50. It's pulled back into the daily 200. So I wouldn't necessarily be opposed to XLE either, because it sure looks a lot like the Under Armour chart just before Under Armour started to go back up again.
It's a really interesting point. You know, Grayson, when you're thinking of the seasonal trends, the seasonal tendencies, right? The other thing I would say, besides the fact that we haven't had a correction, although your point is well taken, TG, right? A lot of stocks have pulled back in a meaningful way, even though the indexes keep managing to go higher. Grayson, what sort of weight do you put on the seasonal tendencies? We're in the seasonally weakest part of the year, the summer doldrums into, you know, the end of the world, the months of August, September into October. Is that something we should be pricing into our process in some way, or how do you think about that?
Sure. You know, I think the trap that people fall into with something like seasonality is that they want it to be a sort of a go or no go kind of thing. They want it to be a yes or no, this is going to happen or this is not going to happen. Ultimately, seasonality for me is a reason to pay attention. It's another data point, but price still has to come first. You still have to focus on what the market's actually doing. So, you know, there's a higher probability chance that something is going to follow a seasonal pattern. But still, if price isn't following that seasonal pattern, then price isn't following that seasonal pattern. We can't argue with that. So you still have to trade the market in front of you. You still have to, you know, kind of be aware of what's actually happening, balance that against the probabilities of what might happen according to those seasonality figures. But it's, you know, it's got to be that balance. It's got to be, and especially the other thing I'd add to that too. Seasonal patterns to me make a lot more sense in sort of relatively quote unquote normal years. You know, when we're coming out of a crazy year like 2020, we're in sort of year 2 of a young bull market. I mean, those things start to go out the window a little bit just because we've had so much volatility. We've had so much happening. There's such a shakeup in the market that, yeah, sure, some weird things are going to happen in those kind of off years, those odd years. So that's kind of how I think about it. It's something to be aware of, but it's not a reason to put a trade on because you think that the seasonality is going to play out.
That's really well said, Grace. I always remind people there are seasonal tendencies, not necessarily seasonal realities, right?
Exactly.
When in doubt, and again, to wrap up our Q&A, I think you guys all did a fantastic job of pointing at the trends. At the end of the day, what could happen is one thing, but what actually is happening, the trends are telling you where the money is flowing and where the opportunities are. Listen, that was it. This hour goes by so quickly, and I really appreciate each of you sharing ideas. First off, Leslie Jouflas from Trading Live Online, thanks so much for joining us. I know people can see you and your work hosting your Daily 5 on StockCharts TV, but thanks so much for joining us today, Leslie.
Thanks, David. It was a lot of fun. Thank you.
Grayson Roze, our own from StockCharts.com. You also host StockCharts in Focus every week, coming out here right about a little earlier today here on Friday, but do a fantastic job highlighting the strengths of StockCharts. And I'm always humbled as always to be talking with someone who uses StockCharts better and more effectively than I do. So thanks for coming on today.
Thanks for having me. It was fun to be here.
TG, listen, it's a pleasure to have you join this time. I hope this is not the last time we see you. I'm excited to get you and your work featured a little more on StockCharts TV. I know you have a show that we're working up with you soon, but thanks for being with us on the pitch today.
Oh, definitely. You're going to be seeing more of me.
So listen, everyone, all three of you, really appreciate you on this Washington State special on the pitch. I don't know if we'll be able to do that again, but it was pretty awesome to show the depth of technical research happening in the Seattle area. StockCharts here based in Redmond. Everyone, that was our episode of The Pitch. As a reminder, you can see a replay of this episode and all of our previous guests with all of their picks. You can see what they picked and when, and then think about how the picture has changed, because again, these pitches are based on the evidence we're seeing today. You never know what's going to happen tomorrow. We can keep current with all those ideas. Go to stockcharts.com/thepitch. Always, as a reminder, you can always go to our StockCharts TV on-demand platform. That's stockchartstv.com. You can also look on all your mobile devices. Just search for StockCharts TV on demand. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe, be well. We'll talk to you again soon. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.